All right. Good morning and good afternoon, everyone. And thanks for joining. A very warm welcome to Acuity Knowledge Partners webinar today, titled Rewiring Banking Operations for Sustained Growth. Through this webinar, we'll initiate discussions on how senior bank executives are reimagining their operating model and aligning with their clients and the current regulatory landscapes and challenges and hyper-competitive market environments and the global talent war. We also want to discuss how banks leverage the partner ecosystem to increase their operational leverage. We have over 160 participants today across the globe, and here are some of the top banks that are joining in this discussion today. So we hope to make this session both engaging and informative. Just some housekeeping items before I kick it off. This is a 60-minute webinar. We'll have 45-minute roundtable with our expert panelists, followed by 15 minutes live Q&A session. So feel free to drop in your questions at any time during the webinar. We'll address that towards the end in the last 15 minutes. If we run out of time, we will make sure that we respond to you offline as well. So quick introduction about myself. Karthik Vijayapalan. I head the banking sales and business development based in the North Americas, based here in New York. For those of you who don't know us, Acuity Knowledge Partners is a leading provider of offshore research and analytics solutions to financial services sector. We service over 600 plus banks and other financial institutions, as you can see here on the slide, with a global team of about 6,000 analysts. We work with leading financial institutions across the banking community, corporate commercial banks, retail banks, investment banks, and so on. Lending services is a key focus for today's discussion, given banking operations and particularly loan operations. A high-level overview of what we do on lending across the lending value chain, be it the credit analysis, origination support, underwriting, monitoring teams, as well as on the lending operations, regulatory projects, and digitization support. On the loan operation side, which is the focus for today, we have a team of specialists across loan operations, loan trading operations, treasury cash management, trade finance, and also risk management. Without much ado, let me introduce our expert panelists here. May I request you to please introduce yourself, Chris, George, Gerard, and Stevie. As may I also request you to maybe add a quick fun fact as you introduce yourself to keep this lively for our audience. Thanks, and over to you, Chris.
Yeah, thanks, Karthik, and thanks, Acuity, for having me. I really do appreciate it. Sounds like we've got a pretty good audience and attendees for this session. So thanks for having me. So my name is Chris Coates. I'm the head of commercial loan operations for Citizens Bank, based out of Providence, Boston, the Northeast. While I am actually located in Atlanta, most of our commercial loan operations obviously is in the Northeast. I'm actually sitting in Philadelphia today, where we have a team of operation analysts. So I've got a team of about 200 spread across the Northeast and actually across the U.S., supporting all different time zones. And just a little bit about Citizens and commercial loan ops. So we have over 6,700 facilities for $110 billion in assets that we manage here. And we really support all the different lines of business, from corporate banking, commercial finance, commercial real estate, and also includes capital markets. Business banking, while that's not under my purview, it is part of our loan accounting system. And I have a peer that runs business banking. So a fairly large and substantial portfolio. So I joined Citizens back in 2018. Prior to that, I've had several commercial loan operations heads, either at JP Morgan or SunTrust. I also had another stint with SunTrust as operational risk, enterprise operational risk manager, supported the wholesale line of business. So I've always been in that commercial space. And I think the operational risk really helped kind of frame out the tool set for me. So when I had a chance to come to Citizens to join them and take my knowledge here, certainly raised my hand. It's been a great opportunity to date. couple of fun facts. So, one, we had our earnings call this morning. We did make a little money, so that's a good fun fact for sure. You may see I'm wearing blue. Blue's my favorite color. I think almost every day I wear some type of blue. But probably the real fun fact for me is growing up in the South, and where my dad grew up, it was tobacco country in the South. They used to grow tobacco, and so what they used to do to have fun was they would take tobacco twine, which is cotton twine. They'd roll up in a ball. They would soak it in kerosene. You'd soak that ball for a month or two, and then you take it out and you light it and you throw it around. It's called a fireball. So it's not the one you drink. It's, in our case, it's the one you toss around. So if you ever hear that, yeah, it's quite fun. Be careful and do not get nylon. You got to get cotton twine because nylon will burn your hand. So that's my fun fact. But thanks, Karthik. I'll turn it over to George.
Thanks, Chris. George. George, you may be on mute. Chris, I've never heard of that before. I should try it out sometime.
It sounds, yeah, I haven't heard of it before either. It sounds dangerous.
Comes with a disclaimer.
It's a hard fun fact to follow up, that one.
So while we wait for George, Gerard, why don't you introduce yourself? And we'll come back to George.
Sure. Yeah, makes sense. Yeah, hi guys. So Gerard, I've been at Acuity only since January, so new to the team as we grow out our lending business. And my background is broadly capital markets with a focus on lending. So as you can tell from my Brooklyn accent, I'm a New York born and raised, which isn't the truth. So I grew up in London. Well, I grew up in India originally for the first 6 years of my life, and then London. And then I've been in New York for the last 20 years or so. And I've run global lending operations teams at Morgan Stanley and Barclays, doing by and large transformation projects and dealing with changing the markets. And I see myself more of a change agent, transformation agent than a product owner, but I have strong lending experience. Yeah, I think that's it. Oh, and fun fact, so I am also a fully qualified FA soccer coach or football coach. So I did my coaching badges at Millwall Football Club 15 years ago. So it's actually, hopefully it might have to be useful because my football team, Manchester United, might need a new soccer coach sometime soon because things aren't going very well over there at the moment. So I might have to lean on that as well and do a part-time kind of gig over there as well.
Interesting. Thanks, Gerard.
Not
George,
quite as good as your one, Chris, but it's out there.
George, over to you.
Can you hear me?
Yeah, we got you, George.
Perfect. Thank you. Thank you very much. Apologies for the technical issues. Thank you, Chris. Thank you, Gerard. And thank you for the invitation to participate in this webinar. It sounds like a very interesting topic and certainly something that we've all been in the banking industry and the financial services have really been dealing with over the last several years. George Martin, I am the head of global banking operations for Natixis Americas, CIB Americas. I've been with Natixis and various other names of Natixis, Ixis when I joined, since 2006. Prior to that, I had been at HSBC and prior to that at Drexel. Most of it in operations, but did have some front office experience in the past. The Americas team in Natixis here is about 50 some odd full-time employees of our team, plus we do use outsourcing. I've participated in both the global market space and the global banking space, primarily in various sectors of commercial lending, letters of credit, We do have a U.S. broker-dealer, which I am not involved in today, currently in the U.S., but have been in the past. Like I said, we've been driving, and we're a French bank that has been driving the activities globally out of head office with a significant presence in the Americas and in APAC. My fun fact is it's certainly not to the level of Chris's, and certainly not to the level of Gerard either. But I've been working over 30 years on my golf game, and it's still a significant work in progress, as I've experienced over this past weekend where I got an opportunity to play a little bit. But thank you very much for having me, and looking forward to our Q&A.
Wonderful. Thanks, George. We finally, Stevie, quick introduction from yourself. A fun fact.
Yeah, thank you for that. Hello, everyone. My name is Stevie Joseph. I've been with Acuity for about 14 years now. My background is probably operations world. I lead the operation services for our clients, including the capital market piece. I'm based in Bangalore, India, in one of our largest delivery centers. And I oversee about 300 plus resources from my end. On the fun fact, my favorite genre of movies is animation movies. With two small kids at home, I do watch a lot of animation movies and cartoons. So I have picked up a genuine interest in these movies. So even if I get some time alone, I try to find some latest animation movies and watch myself, where others look at it as a little weird, but I do really enjoy that. Thank you for having me in the webinar, and look forward for the discussions today.
Thanks, Stevie, and thanks everyone. So let's dive in. Just a quick intro to the context of the webinar, right? In terms of what we're discussing on the banking operation side. The banking industry is at crossroads, as both the inflationary as well as the geopolitics environment has led to sluggish credit growth, slowdown in deposits, and increasing in non-performing assets. The grow or die imperative faced by banks with increased bank consolidation and competitions from shadow banks has also increased the urgency for banks to adapt swiftly and rewiring their banking operations. I read somewhere that the number of banks over the last 10 years have reduced significantly, more than about 50%. Just in the US, there are about 4,000 banks. In another 20 years, they're expected to be only about 2,000 banks. So banks do need to kind of, there is certainly a survival of fittest going on here, the competitive environment. Coming back to the most recent earnings seasons, I think Chris talked about the Citizens' earnings. Most of the big banks have reported their earnings so far. Lower earnings continues because of the higher interest rates. Yesterday, Jerome Powell also further cast doubt on further interest rate cuts this year because the inflation seems to be sticking out there. On the positive sides, we are seeing some deposits are improving. Innocent banking and fees and IPO are also picking up. So overall, I think we want to focus this discussion on how do banks plan to transform the model to improve the bottom line as well as talent retention as it pertains to banking operations. With that, let me jump to the first question. This is Chris, George, to both of you, given that you had an operations team of the banks. Given this weakening loan growth and tightening standards, made banks rethink their risk and operational strategies. What do you think will be the key priorities for the banks as you look to navigate these challenges in 2024 and beyond? Chris, maybe we start with you.
Yeah, thanks. First of all, I would have to say deposits, right? That's kind of the key here, quite honestly, from the top of the house. But in all seriousness, for us, and I'm going to speak specifically for my commercial loan operations team, not necessarily the broader Citizens team, but always enhancing risk management is in our practices, and optimizing operations is key to us. Whether we do that through enhanced technology, I think we all have that same North Star that we're shooting for, right? Where we are on that scale. We may be in different places, but we're all kind of shooting for less rekeying, quicker onboarding, faster closing, funding, electronic payments, advances. What can our clients do online? I think those are the things that we look for. But as we do that, right, we got to be very conscious of who is the client. Obviously, the world is changing from a fraud and a risk perspective. Obviously, with the real-time payments and things that are coming up, how does that impact us? And we need to be ready for that at the end of the day. But certainly, we use our internal teammates to help us bridge that gap. And I think with most operations, you see seasoned individuals, and how do we take those individuals and retool them to where they are more technology savvy at the end of the day. So we have a lot of opportunity in that space, as well as, what is our hiring practice for those new people that we do bring on board? We're kind of unique. We're in a dual hybrid loan accounting system environment. So we have people that play in 2 loan accounting systems based on the product type. And so that adds complexity and risk to us as well. So, we are looking for every opportunity to upskill our current talent, hire in the talent that we need, because there's a lot of risk in retention, but also in the turnover aspect. One of the things that we also did was, Acuity was brought to us through our portfolio management team about a year and a half ago, as a knowledge process owner. We typically call them business process owners. Really, they're knowledge process owners. And we really leveraged Acuity and Karthik and his team's skills for specific pieces of scrubs or actions. When we bought Investors Bank recently out of New York, we had Acuity come in and do several different projects from a portfolio management side, but also from a collateral scrub side. They hit the ground running. It was very easy. It was a very easy transition, because I think Acuity and Karthik and team bring in a specific skill set around that. And so we've also talked about some other different things, but really we bolster our current talent with people like and firms like Acuity to help us kind of get to that next level.
Thanks, Chris. That was very informative. A great focus on risk management, and then I think the juggling with different systems seems to be an interesting dynamic environment that you're facing. George, what do you say on the key priorities for the banks, and how are you navigating?
Yeah. And thank you. And I would echo what Chris was just saying, right? We're leveraging wherever we can manage risk management and customers, meeting customer demands, which are ever changing, are the key factors for us. As you mentioned earlier, the business activities and non-financial companies are starting to come into the lending space more and more. And we're hearing that from our business partners, that the competition is extremely high. We're looking at, as a firm, at where we can provide the best services that we can. So unlike Citizens, we're not, in the Americas at least, we're not a deposit-taking firm. Natixis has a retail space out of Europe, primarily France. But in the U.S., we are just a commercial bank, and we're in that lending space where the challenges are continuing to get bigger and bigger, and we need to figure out where we can focus on as a player in the Americas. For my team, from the commercial banking operations perspective, risk management is without a doubt one of the key factors that we need to be able to provide to our business partners, to our regulators. We leverage on the 3 levels of defense, where the operations team is in that first level as a partner to our front office partners. That is a global process that we are working on. We still have various dispersed systems, even though we are slowly migrating to a global process. We do have, and we migrated to a Loan IQ application about 2.5 years ago that took a significant amount of effort to get us up and running. It's what led us to bring in Acuity. We were introduced, similar to Citizens, and what Chris said, we were introduced to Acuity by our portfolio management team. Acuity have been providing services to our risk team and portfolio management team as we delved into other outsourcing services. Acuity was brought up by the risk management team as somebody that can help us, that already had some level of experience with Natixis, and it was a great fit to get us through a very difficult time, and we continue to grow over the last 2.5, 3 years. Going back to the space on what we're seeing, risk management, the regulators, what their information, that's where we're playing the biggest piece. We're looking at automation, AI, ChatGPT, all of those, blockchain, and connecting it with OCR, which is something that we've had in the past, or we found it difficult to connect the OCR process without connecting some of the other smart automation tools. We're looking at, how do we manage risk through the chain globally and through our chain locally with compliance and our audit team. And then the last piece is we need to provide services to our client. We need to really understand what they need, what they're expecting from us, and be able to be truthful on what we cannot deliver properly and decide on how we're going to move forward. So those are the keys for me. So it's very similar to what Chris is looking at it from a citizen's perspective, even though our companies are slightly different or are different.
Thanks, George. That's definitely a great perspective there, I think, in terms of how you're balancing the client servicing aspect with the 3 lines of risk and risk management while navigating the systems as well as the talent challenges. Thanks for your inputs there. Moving on to Gerard, given your experience on the middle office side, and what are the critical drivers do you think to have a future-ready operating model that leverages all the synergies across these banking functions?
So I think the three pillars for me are control, accuracy, and efficiency. So, and my career has been operations broadly most of the time. I've worked in the front office too, but I think these days, if you work in operations, you should consider yourself to be a change agent. So it's about knowing how change works, and that whole transformation piece is around accuracy, control, and efficiency. But to implement any kind of transformation, you need to have a complete transparency on everything from front to back office. So, for example, my role when I moved to Barclays, we were implementing LoanIQ, and the program. First of all, you also need to be conservative because these transformation programs, and I'm probably preaching to the choir because George probably has felt the pain of a LoanIQ implementation project as well. But you need to be very conservative with your stakeholders as to how long it's going to take and the uplift of any kind of program like that. So the implementation and the planning piece is critical because the last thing you want to do is have to bring something back that you've already just brought in. So, yeah, I think the planning, but you've just got to be conservative with whatever your targets are. And the other thing is have the right implementation partner. So there's 2 pieces. The technology you're bringing in is critical. It has to be the right technology. But you're right, you need the right implementation partner to get it done. If you don't have that, then it's not going to work for you. So those are 2 things that I learned. And that was actually my segue into consulting. So I used to work for Barclays, and we used a partner to bring in a whole new platform. And that got me interested in transformation. And that's kind of that led to where I am now. But I find the whole transformation piece exciting and interesting. But any kind of technology transformation project that your firm's going through, it's just critical to have the right partner that understands what your pains are, plan it all out, and help you get through the journey.
Yeah, the transformation definitely, I think it's across all banks, right? I think all the banks I speak with, they're all going through some kind of transformation. But talking about transformation, George, what do you think are the biggest challenges banks face in these transformation programs, especially when moving away from fragmented legacy systems
Yeah, with the growth of technology, and Chris touched base on it in his introduction with cybersecurity, right? The more technology that we bring in, the more risk that we're bringing into and manage our process. So cybersecurity is certainly something that Natixis is paying a very close attention to. It's something that our entire teams are trained on daily. I probably get some kind of a spam test at least 2 or 3 times a week. Sometimes they're offering, Super Bowl drawings for Super Bowl tickets, and then that's the way that they catch some people. So I think that's one of them that the whole industry is looking at. Technologies are changing at breakneck speeds, that it's hard that by the time you implement something else is out there that's new. I know our bank is a little slow in the uptake. We're taking a very conservative approach, and sometimes rolling out a process takes time. And then there's always the legacy. So a couple of things. You have the legacy systems that are always difficult to manage and change. You have the technologies that are constantly changing. Customers and regulatory expectations are evolved constantly, where more demands are placed on us for better and almost real-time data is required and reporting is required. And then you have the budget constraints that are always a challenge on how we manage the process. So I think that's what the industry is dealing with, in my view. For Natixis specifically, we have mandates and processes that are not fully aligned with all of our tools. So we're working on it, but we're not fully there yet. Some processes, or a lot of processes, at least from the global banking perspective, are still manual in nature, and we need to collect all of this technology that's available to us and figure out how to use it. We have a version of ChatGPT that's local to us that is being piloted currently, but it's still the technology from the that's not quite there yet. But we're looking to leverage it, and how we're going to be looking at it on various test cases. The payment systems that we have are different from, and again, Chris, I think, mentioned this as well, right? Where we have different processes locally than we do globally. So we need to align all of those. And our systems front to back are not completely connected. And when there are connections, they're difficult to manage. So all of these things are part of what we're looking at for our future. We are currently in our strategic plan, looking at what the next 5 years are going to bring, and it's hard to imagine what technology and what things are going to be looking at 5 years out. But those are the pieces that I think are the largest challenges that we're seeing in the industry, and certainly in Natixis.
Yeah, Karthik, let me just jump in and piggyback on
Sure.
what George is saying from a citizen's perspective. Absolutely in the middle of transformation. And for us, again, I'm just talking about commercial loan operations at Citizens. I mentioned we have several different loan accounting systems based on products, but let's just use the 2 big ones that we got, AFS and Loan IQ. Well, we're in the midst now, after we just put all of our syndicated deals in Loan IQ 3 years ago. We are now looking at bringing Loan IQ in-house, right? We want to bring it in-house, just like for like. But the problem we find ourselves challenged with is it's not just that system, right? It's the other systems. So we use 3 different loan origination systems. So how do we build those? We're actually have already started creating an internal loan origination system. Well, we want those origination systems to also talk to our loan platforms, right? We need to build that straight through processing, if you will. And the challenge that I find, and even previous institutions, was, are we a build bank or are we a buy bank, right? And what does that mean? Do you build something yourself and support it, like we're doing with SalesFlow and Salesforce, or do you go get a nCino loan origination or an AFSO origination system, right? Where does the business make sense for us? Those type of roadblocks really challenge us, because each one of those bring a different concept, or our technology partners or third-party services, whoever need to help support that. It's just a challenge because we have so many of those disparate systems. So we know where we want to be at the end of the day. Like I said before, we know what that North Star is. And George is absolutely right. It's just so many different things going on. And then you got to reprioritize what comes next. Certainly the payment systems are a big thing for us, as we know. Some of them are outdated. How do we move forward and get those done? We know there's an expectation by the clients of real-time payments, and how do we meet and exceed those? It's all about the client and those needs. But certainly I agree with George. I think any of us in that loan operation space, we experience that frustration regarding, do we build or do we buy, and then how do we make it all kind of come together and work in a seamless transaction?
Thanks, George and Chris. That's certainly interesting. And I think Acuity, we do work with several banks on these transformation projects. And one thing we are is, we are platform agnostic, right? So we work on different platforms that you mentioned. And the one common theme that we see is, there are different systems are used, like you mentioned, Chris, on the origination side, etc. So the interconnectedness between the data and the different systems the banks are using on the operation side certainly seems to be a challenge that needs to be addressed when we are implementing these transformation program. And to add to that, as you mentioned, the buy versus build can add another layer of complexity there as well in terms of your tech architecture overall. You mentioned about the real-time, Chris, so just switching gears there, in terms of the lines between the intraday needs and the traditional end-of-day processes continue to blur as real-time accuracy and tight internal controls have become a competitive necessity, right? How have the roles of banking operations team evolved in this dynamic regulatory environment? Chris, maybe, and George, maybe both of you would like to respond to that.
Yeah, so look, there's an expectation out there, right, around real-time payments and settling payments. I would like to say, that we are same day. It'd be tough for me to say that. That obviously that's aspirational, but that's going to be a challenge for all of us, right? Especially the volume of payments. Now, I do think there are some tools that will be available to us in the near future. I'm sure some of you guys are aware of Versana from the syndication side. I think that'll be a huge win. We can get that up and running and be a part of that consortium around syndication deals, because a lot of those trades and monies go through there. So I'm actually looking forward and excited to Versana if and when we can get them onboarded and use that data. But it's really just a data consortium. But it's a real-time data consortium, and it seems to be pretty robust, especially when you get the big boys like the JP Morgans and the Wells and the B of A's that have bought into this particular platform. So I think that'll help everybody once everybody kind of subscribes to that and gets on board. It's not something that's a magical bullet. It's not the silver bullet at the end of the day, but certainly I think it's going to be a value add for those that do participate in that particular product.
Thanks, Chris.
Yeah, and
George. Go ahead.
Sure. And from our perspective, we are, like I said before, at least in the Americas, we are not dealing with funding on a large scale, but we are looking at lending activities that happens on an intraday basis. So certainly leveraging on how do we bring in clients to facilitate all of our processes. We've tried launching platforms. The problem with platforms is clients don't want to be dealing with multiple banking platforms. They want to have one singular place, and they continue to work with emails. Versana, Chris brought it up, is another fintech that we're looking at that could be a game changer in the future. We're not there yet with them, but it's something that we are looking at strongly. From our perspective, they're very U.S. focused. We're a European bank, so it's a little bit of a challenge, but I think it will, and they are looking to go into Europe based on our last conversations with them. So it will definitely bring a tremendous amount of information when you're dealing with Asian banks and the flow of information that needs to happen and how funds flow all the way through. From our perspective, we have one product, one process that required intraday flows to happen from a regulatory perspective, and it's on the global market space. When we're funding activity, and those are daily reportings that we need to provide to the Federal Reserve. So we've created an in-house process to deal with that, but it's, it was something that needed to be put in place because of the regulatory demands. But our systems work on a batch process, right? So we're seeing information based on what we have in our Loan IQ system. But when we don't have full capabilities of seeing P&L. We don't have full capabilities of seeing all of the activity and the real risk that is going through on an intraday basis, other than putting in a lot of pieces together. So that's where the challenge is. And I agree with you that the lines are definitely being blurred. Regulatory requirements, clients, risk management require intraday valuations. We do see it, but it takes multiple hops to get there. Reconciling multiple applications is always a challenge. But that's what we're working on, and those are the keys.
Is data availability a challenge, George?
I'm sorry?
Is data availability, do you see that as a challenge for these?
Yeah, data is something that we are working on. It's always a challenge, and it's the same problem, right? The way that the data is in one application is completely different in the other. We're managing applications and data through the cloud, and we're looking for that golden source on all of our applications. But the amount of data that's out there is significant, and we need a place to be able to translate and have it as a golden source where it's available without having to leverage all the time on IT and IT developers to pull the requested data from us. So general data is available and generally available to the business and operations and risk management team, but certainly not all the data that's there. Once we can harness that, it'll be extremely impactful for us.
Thanks, George. I would like to bring in Stevie now. Stevie, I think talking about regulations, you're on the capital market side, right? Of the whole T+1 going live next month. What are some of the challenges, and how are those regulations impacting banking operations on the capital market side?
Many changes are happening around the regulations, as we all know, and generally, operations teams prepare ahead of them because these are, not to the system much ahead of time. From a capital markets operations perspective, taking T+1 settlement cycle as an example, the transition to T+1 settlement has a significant impact on the operations for banks from next month onwards. Banks need to accelerate their trade processing activities because we all have to get these settlements done immediately to meet the shortened, settlement time cycle that has been the new rule or the new regulations now. As we all know, there is a push to modernize the operational infrastructure these days. Both George and Chris mentioned earlier, by the time we are ready to move towards a new technology, there is always a new one in the market. So there's always a debate around it. How do we implement and how do we run behind it? In the client engagements that we work on from Acuity's side, we see banks preparing for this transition in multiple ways. The timeline is set for the end of May 2024. Let me try to group them into some buckets. Number one, developing a comprehensive strategy that includes the timelines, managing the resources, and preparing for the contingencies. Many of the teams are looking for staggered resources coverage across onshore, offshore, multiple locations to ensure enough time to handle the volumes to settle these trades on a T+1 basis. Second one, the technology investments to automate the processes such as the trade capture, confirmation, settlements, etc., etc. There are many third-party systems that we talked about that in the previous question also. But it's all about how do we find the right one and who could be the right execution partner. That's the best way to optimize such a critical situation when it comes to the regulations. A third one is on evaluating how the shortened settlement cycle is going to impact the capital requirements and liquidity management, because the quicker turnaround of funds and securities, that can improve the liquidity and capital efficiency for the banks to redeploy the capital more rapidly. So the short-end cycle is going to give a lot of liquidity around the system. So that's another aspect to consider. A fourth one is the communication across the clients, because it's a change. So each of the clients are going to have a impact in their books in terms of how this regulation is going to make their books very clean in the next day itself, rather than holding it for a multiple days scenario. And the last one could be looking beyond the immediate compliance to how technology can be leveraged, but more of a futuristic efficiencies and competitive advantage building, because it's all about how we deal with such a situation more realistically and more sustainably. That's how the new regulations and how the banks are getting prepared for it generally. So overall, with a strategic and collaborative approach from a capital market operations perspective, we would be able to cope up with the evolving regulatory pressures. That's my view, Karthik.
Thanks, Devias. Definitely, I think for a lot of banks looking to go with the T+1 settlements, I'm sure that's useful comments there in terms of summarizing the approach. Thanks for that. Now, I think shifting gears on the human capital side, right? I think the whole human capital challenge and talent management strategy. Banking operations teams, as all of you know, are pretty large teams usually, and with diverse skill sets, and and more expectation, right? And even a little bit of tech expectations, etc., with different systems coming in. So it's one of the, I would say, the engines within a bank, and it has to be managed properly. So in terms of the how are banks re-engineering their human capital to deliver value, and to add on to that complex expectation in terms on the supply side, we now have the new there's a shift in terms of what the new candidates are expecting in terms of working from home versus hybrid culture, the Gen Zs and Gen Alphas and so on and so forth. So with that note, maybe let's start with you, George. How do you think banks are re-engineering their human capital to deliver value?
Yeah, an interesting challenge that we've had since COVID. We were, at least in Natixis, we were fortunate enough that we already had and were set up ahead of the COVID process back in 2018, 2019. Our desktops were removed from the operations team. In the Americas, we were fully remote capabilities. When COVID happened and we were all 100% working remotely, that was the challenge, because that had never happened, but our technology worked well. And the challenges there were challenges with communications initially, but they were worked out very quickly. Working remotely, we are currently at Natixis, we are in the Americas. It's slightly different in Europe. We are remote 2 days a week max, which gives some of the flexibility. There are some staff that are looking for more flexibility. For me, I think one of the downsides as an operations team, we need to be able to communicate. We need to work together in order for the things to work properly. So it makes a bit of a challenge when part of the team is on site and the other part of the team is dispersed remotely. But it's worked. You do lose some of the culture aspects of it when you're near 100% or some portion of it is remote. So it's a challenge that the industry is working with. I know our CEO would prefer to have everybody in 5 days a week, but that's not where we are today. As far as having a future-ready operations team, mentioning technology, that continues to change, and you brought it up. Our staff needs to be certainly aware of the technologies and be able to manage it, develop it. We are looking at low-code, no-code solutions. Alteryx is one of them that's out there. That's one that we're currently using, where we are providing licenses to willing and able staff that can help develop processes and enhancements to our legacy systems and connecting applications. But it's a work that will continue into the future. The skill set of the future, from my perspective, we need to be IT. We need to know the products. We need to be client-centric. And we need to be risk managers. That's part of what the future, I believe, is going to hold for the operations team. I don't know what the transformation of the jobs are going to be, but certainly technology will have a major impact. I've been around long enough where we were managing manual and tickets, right? Where tickets were flying from one place to the other. And automation changed the way that my original team, we had 50 people that became 5 from processes. But those other jobs went to do other things. And that's what I see the future of the technology. From my perspective, is not about downsizing, or it's about reshifting what the focus is going to be. And it's going to be more about clients and regulatory and enhancing the processes. So the skills, it's going to be training for our current staff. And the skills of the future are going to have a background on those processes, and staff development is going to be a crucial part of us getting to where we need to be in the next few years.
Thanks, Josh. Is access to a global talent pool becoming increasingly important in this whole human capital puzzle?
It is. It is certainly something that we've leveraged. We have short-term assignments that we take advantage of between our platforms, head office and our platforms. We have certainly taken advantage. Our Paris office is significantly much larger than us, so there's availability of very good talent that can come across. We use global process owners as a leadership model that we've put in place. Our global process owners, where they are experts at the processes that need to be managed, and it's a way to manage best practices across all of the platforms, and making sure that we have one global standard for our processes. There are differences between the Americas, EMEA, and APAC. But those need to be defined at the global process owner perspective. So our talent pool has definitely expanded, and we're certainly leveraging where we can. And the ability, we're not there yet, but the ability to work remote should give us the ability to hire people wherever they want to be. But like I said before, when we do that, if we go down that road, and so far, anybody that works in the Texas US is within the tri-state area of New York. But it's certainly talent that we can package from anywhere in the world, and I think that's going to be a point that the industry will be taking in the near future.
Thanks, George. And Chris, any final thoughts from you? And also in terms of leveraging third-party partners or a hybrid model with an in-house and partners like Acuity.
Yeah, real quick. So I agree with George. We're a little different because we are strictly a domestic bank. And what I would say is we're the same way. We are 3 days remote. 3 days in office, 2 days remote. And I think we would like to as well see that increase. And there's something to be said about proximity and collaboration, right? Especially when you're talking about loan operations. But we have a lot of decentralized sites today. We're not all co-located in one spot today. But I will tell you this, that really helped us during COVID and now being remote is we can go seek that skill set that we did not have. Specifically, when we talk Loan IQ. Loan IQ was brand new to us. We had zero experience with Loan IQ. So when we turned the switch on, it was whatever we learned in training and whatever came in the next day and whatever we learned the next couple of months. We immediately went out and sought individuals. And fortunately, we were able to capture some of that talent in the Charlotte, North Carolina market, where you've got the Bank of Americas and the Wells Fargo's and the Truists who are on Loan IQ. And they were making their employees come back into the office full time. We gave them, hey, you can work remote. And so that has really helped us, quite honestly. That was a competitive advantage. And those people have brought on a lot of skill set for us. That's just one piece. But the other piece, Karthik, as you mentioned, really is, speaking of a KPO like yourselves with Acuity, we have the ability, we don't necessarily need to track the sun, kind of like as a European bank, global bank that George is with. That doesn't preclude us from seeking offshore partners that may be in India where they can do work at night. So it's staged for us when it gets in the morning, right? And then you also have some closer resources in Costa Rica if we need to be on a similar time frame. So they're very available to us, and there is a need for that. And so, while we don't always have to follow the sun, you guys and KPO companies like yourself, BPO companies, do allow for that flexibility. And then we also backfill it with our own teammates. As we spread across and we grow the footprint across the Americas, right? We've got to be able to service that West Coast client just as much as we do the East Coast, Northeast time zone clients as well. And so being remote for certain skill sets has really been a benefit for us as Citizens, for sure.
And just to echo Chris's point here, the same with us and Acuity, right? The fact that we are able to leverage your Costa Rica office has been, I think, a critical point for us because it's closer to our region. Natixis has a nearshore site in the APAC region, and we have one in Portugal, in Porto. But their working hours are based on their local times. Which is works for us for part of the day, but not the full day. Where Acuity comes in is certainly from your India region, you're providing services to us. Costa Rica being in the U.S. time zone, critically important for us to be able to develop and continue to grow in our partnership. So that's without a doubt something that we have seen has made a dramatic impact on our process and delivery over the last year.
Yeah, thanks, Chris and George. Let's move on to the Q&A session. Now we have some live questions there. We'll try to address as many as possible in the last 10 minutes. And for those of you we could respond, we could come back to you offline as well. So the first question, this one is, how agile are the banks in responding to current market changes and disruptions? I'd say, I think we covered some of it. Maybe George or Chris, one of you want to take this question?
Sure. I would say that it's still a little bit slow. I think we are trying to anticipate, and we are seeing what the anticipation of processes are. And I can speak about Natixis. We take what I feel, in my opinion, is somewhat of a conservative approach, which has helped us. Navigating multiple aspects of processes. So when the bank is starting to see the conditions are shifting, we're trying to anticipate that, but we anticipate it by being a conservative player and kind of stepping back to that process. It certainly helped us through all of the volatility that we had seen in the last 4 or 5 years. We are in the real estate space. The commercial real estate space hasn't been great over the last 3 or 4 years, as you had mentioned at the top. So, I think the regulators are putting a huge amount of pressure and making sure capital is well managed. And that's the way that I think large banks are going to deal with it. But anticipating conditions is a difficult thing. And I think we're still kind of slow as an industry.
Yeah, I totally would agree. And I'm going to speak for Citizens. In my experience there in 6 years, we've gone from talking about turning and being agile. We've gone from being an aircraft carrier to just a battleship, right? We would like to be at a U-boat type thing. And I think part of that, we only need to go back to PPP. What did we all have to do during PPP? We were very agile to stand up our programs and get that through. So there are things that we do, and we look back at that like, why does it take us so long? But when it comes to a regulatory environment, trying to think ahead to where we're trying to do, inevitably we take that step and it's like, oh, we went the wrong way. So we don't want to misstep, and that's why I think the industry itself takes a while to kind of turn and be agile.
Thanks, both of you. Another question from the audience here: how can traditional banks gear up for competition and challenges that they face from some of the non-banks and fintechs? Any thoughts on that?
Yeah, one of the challenges that we've been speaking about for quite a bit, right? We had said that I'm certainly seeing from our perspective, our business are seeing competition for lending coming from non-traditional firms. So firms that weren't players in the lending business 4 or 5 years ago have money now and have capital now to put transactions. So what can we do and how do we provide value? We provide value in providing services to maybe those non-lenders, and it's something historical non-lenders. We're looking at providing solutions, and those solutions could be to the fintech companies. It could be to anybody that's playing in the lending space. I think one of the things that we have to take a look at is, where are we going to be in 4 or 5 years in the lending process, where traditional banks are going to be a shrinking piece of that space. And it's something that we are thinking about, but I don't know if I have the answer to that, at least not today.
Thanks, George. I'm trying to cover one more question here. So this one, from the audience, do you see AI contributing to payment process in coming future, especially in integration of some of these and standalone processes? Chris, do you want to take that?
Yeah, I absolutely think so, right? I was in a conference yesterday, and this topic was touched on. Look, I think from a payment perspective, we know what the dollar amount that it's supposed to be and what we get. I think this can be matched up, and then there's some logic that can be read. So I absolutely think there is. I don't know exactly how that would be, but yes is the question. The how is I wouldn't know, right? At this point in time.
Yeah.
But that seems to be very logical.
Yeah, and I think the challenge, Chris, right, is that the loan market, the relentless challenge in the loan market, it doesn't settle on an exchange like bonds or derivatives where it's like for like, the transaction matches and it settles. So that's the challenge with the payments piece. But I think AI definitely will progress there, but just because it's such a bespoke product, it's a big lift to do. And, whether it's Chris at Citizens or, George's loan book, there are big books and there's a lot of payments, but they're all bespoke. So when you're not settling on an exchange, it just becomes more difficult to settle. T1, when Stevie was talking about, his market's moving to T1, that would be a dream for the loan market. We're talking about T15, T30 and, the rest of it. So
we had looked at a few fintech companies and using blockchain in the past, but we always have the same issue, right? You have multiple fintechs that are playing in that space. And now you're going to have 50, 60 different clients using 50 or 60 different processes. But you would think that we're going to find a solution. Whether we create a centralized clearing, for talking global markets type stuff, for using blockchain technology, even for bespoke transactions where you secure the transaction, you know what your terms are, and you can process payments quickly through that process. But the blockchain has been around for quite a while, and it really hasn't taken significant space, at least from what I see in the loan space.
Right. So my view is also something similar. So as of today, we may not be at the exact position to take or depend fully on AI. But I think there could be a scenario that could be a rise, sooner. In terms of getting these things added to the algorithms, the blockchain that George mentioned, etc. There could be a better version that may arise, but not as of today. That's what my view here.
All right. Thanks, everyone. I think we have time for one last question. So let me see which one I pick here. Are banks acting more quickly and aggressively handling new loan originations, given reduced demand of loans and abundance in supply? If yes, what are all the things they're doing now to compete in this industry?
I can say from my perspective, yeah, we are, and the biggest blocking point at Natixis has always been onboarding a new client. So only a couple of years ago, sometimes that would take 20, 30 days getting all of that data and having them ready to go. doing a transaction, and once the business has agreed on terms, it's relatively easy for us to do the process from an operations perspective. But onboarding a client and going through that vetting process was a significant. It still is a significant process. We've been able to implement some additional technologies and leveraging on industry tools that has helped us go to market a lot quicker. But there's still room to continuously improve on that process. But I've seen some improvement on our process. But that's still the vetting process is, at least at Natixis, is one of the major points that we are dealing with as far as timing is concerned.
I think it's a segue on that, George, right? So one of the challenges is when, with Natixis and Citizens, you have a large loan book, and these new players in the market, it's because they have smaller books, they can be more agile and move quicker to market sometimes. So, that's something to consider as well.
And very competitive.
Yep, exactly.
Well, thanks everyone. I think that brings us to the end of this webinar. So if there are other questions, we will get back to you offline. Once again, thanks everyone for joining this webinar. We have put up some key contacts there. You can also find us at our website, acuitykp.com. If you have any further questions on that, we'll be happy to have a conversation with you. Thanks. I think we have a few more questions coming up, but we'll definitely get back on those as well. So once again, George, Chris, Stevie, and Gerard, thanks again for you taking time to be part of this panel today. We do hope to also, for all the audience, there'll be a short survey as you exit this webinar. Kindly request you to please complete. It should take not just a few minutes to complete it, so we get your feedback and kind of weave it into our upcoming webinars in this series. Once again, thanks everyone, and have a great rest of your day.
Thank you, Chris. Thank you, George. And Karthik, thanks for moderating.
Thanks for
Bye-bye.
Bye.
Thank you.